What is going on, everyone? My name is Kenneth Beard, and I'm back with another overall breakdown where I break down the overall economy and my thoughts on what direction I believe that our overall indices are going to be going in the near future. Um, and some things that I've just been watching over and headlining news and other things of that nature. So I'm just gonna hop right into it and get straight into these economic indicators and other things that we want to be looking out for this upcoming week. It is Friday, and so the trading day is going on right now. It's about 2 o'clock, well 1:41 to be exact, and the markets are rolling. But I just decided to stop here and make a video explaining what I have been seeing overall in the economy this week. So let's start from our economic calendar, our U.S. economic calendar to be exact. I don't really look at any other countries' economic calendars and things like that. I just focus mainly on the U.S. So I'm gonna break down from Monday to Friday here. Monday we had our market manufacturing PMI. Those numbers beat about by one. Previous was 59.1. Then we had 59.2 coming at 59.2, and ISM manufacturing index 60.7, missing by about 3%. Well, something 3.5 something percent. 58.7 coming at the actual construction spending dropping as well. Median forecast was actually 0.8, but we beat that by 2%, but still missing out by a percent on the construction spending. And then we just had some people speaking on Monday. So Monday was a fairly relaxed and calming day. We did miss out on some of those numbers, but overall, market did hold up pretty well. And even though those numbers, were missing some of them, overall, not too bad for the market manufacturing PMI and the ISM manufacturing index. Tuesday, we had a lot of people speaking in home ownership rates, which the actual is not showing up, so we're going to skip that. Wednesday, we had ADP employment, the ADP employment report, which was negative 78, boosting up to 174,000, which is a good thing to see. We had our market services PMI beating by just a point in something, from 57.5 up to 58.3. So looking good on that. ISM service index was up as well from 57.2 to 58.7, 57%. Being the forecast, so beating on that. And so looking for our services indexes and our production so far, not looking too bad. Not looking too bad. Staying above 50, which is expansion. We know that. And so not looking too bad. Then we had some people speaking on this day as well. Thursday, we had the initial jobless claims, also leading towards the downside, which is a good thing. To be in fact going from 812,000 to 779,000, so that's showing us something. Continuous jobless claims being less as well from 4.7 million, 4.8 million, just on the dot, to 4.59 or 4.6 million on the dot. So down on those as well. Productivity dropping, which is maybe a coincidental thing, but productivity is dropping, and so obviously here you can see that, and so not a huge factor, but at the same time it is a factor that you want to keep in place. But I feel like, honestly, with these, I feel like the biggest thing in the economy is these people going back to work, and here you can see the markets being held up purely off of these initial jobless claims reports. So Labor costs up from negative 7 points, 7%, to 6.8%. Factory orders is dropping, and then we have some people dropping by 2%. Or we have some people speaking as well on Thursday. Friday, not a huge day, but Friday we had non-farm payrolls come in from negative 227,000 last quarter to 49,000. Median forecast was 50, so only missed by 1,000. So pretty much had that on the dot there, which is a good thing. Um, Unemployment rates from 6.7 dropping to 6.3%, looking good on those. Average hourly earnings dropping to 0.2% from 1%. Trade deficit was $69 billion, basically, dropping to 66 negative 66.6 billion. So trade deficit dropping. And then we have our consumer credit, which hasn't came in yet, but we're not going to worry about that. So that's pretty much it for our economic calendar there. Not too busy of a week, but we'll actually take that back. It is pretty busy week because the market's being affected, in my opinion. So let's just break down, starting with some of our indexes here. We're going to look at these E-mini NASDAQ futures coming in here. The NASDAQ was kind of consolidating prior week, but this week we've been doing pretty nicely. As coming in to the week, we had a nice rebound straight off that 50 SMA for me. I don't use EMAs, but I'm using SMA. A nice bounce straight off that 50 SMA, going straight back up to the upside. Obviously, if you're looking at this, you're seeing that there's some strength still in bullish territory for the overall market, so nothing to be quite concerned with as far as direction. We see the direction. The direction's quite clear. Not in any overbought scenario or anything in that nature, but it is looking like a bit of a bearish divergence. RSI is moving towards the downside, even though we are making new highs. But like I said, it may just, of course, we're going to be due for a pullback sometime soon. But if we do pull back, I think that we'll hold that 384 level on the ES. I think that we'll hold above pretty nicely, except for the exception if some drastic negative news comes out, some drastic negative catalyst comes out, unemployment rates shoot back up and whatnot. Then, I think that with the dropping in employment rates and vaccines coming out, I think our economy is starting to see a bit of a correction, and not a bit of a correction, a lot of a correction, and is looking good to the upside, right back above that 20 SMA. So we're looking at sharp, as far as price action goes, we're looking at a sharp upwards trend. Volume is leaning towards the downside though. So volume's not, it could be being blocked. We may not be able to see the volume coming in here, but as far as to the upside, volume is not holding up our position or holding up this trend. Unlike you see the downtrend, we were putting in some pretty large volume, but volume is decreasing on this uptrend, which is leading me to believe that we could potentially see a top sometime in the near future, but I could be wrong. Going to these NASDAQ E-mini futures, looking at these here, these are also in a pretty solid and strong uptrend, pushing towards new highs, and just about at new highs as of right now. Looking to continue this trend. Kind of doing the same thing as our S&P 500 futures. We're coming down, hitting that 50, bottoming out at that 50, and pushing back up towards the upside, breaking out of new highs. So, as far as implied volatility, during this downtrend was looking pretty nice. I think it was about 40-30%. On implied volatility, and if you're trading indexes, 40-30% for index implied volatility is decent. That's good. you want to be taking advantage of that implied volatility. If you're an options trader, you want to take advantage of that. And times like this when we have these pullbacks, that's kind of when you want to position yourself at. I like to position myself at these pullbacks and these tiny little spikes in implied volatility, because I tend to see that the pullbacks, the spikes in implied volatility, usually don't happen unless there's a drastic pullback and whatnot. But I mean, sometimes here they like right here they can happen towards the upside, but and that's when you want to take advantage of a downtrend per se like this as implied volatility starting to spike, or if you want to position yourself towards the low end, towards support, and kind of position yourself to take this thing back onto the upside. But right here, I kind of position myself um, on my, I kind of position myself. Okay, let's fix that. Okay, it doesn't want to. Okay, I kind of position myself down here, and fixate yourself down here, wait for that nice bounce, and just take advantage of the IV crush as well as the directional move with whatever strategy that you're going to use. I'm not a financial advisor in any type of way, but I do have a clear sense of where to position myself when it comes to options and implied volatility. So that is for the NASDAQ, S&P. Let's go ahead and look at this Russell 2000, which is looking pretty interesting. I traded this a couple times as well. The Russell 2000 was, of course, seeing some very nice expansion to the upside. And, seeing this, you're like, okay, well, we've been overbought for a minute. And then alongside the S&P and the rest of the market, we also had that nice decline, basing at this nice support level here. And then as soon as I seen it start to get correct, come back above the 20, I was like, okay, nice spike in implied volatility here. This is a good play. Here probably would have been the best play here, but as taking advantage of these couple of days to the mean, that would have been a good trade. Or even if you waited here, let that bounce back up, take advantage of just maybe you buy long debits, spreads, something like that, catch that thing back to the upside. I didn't necessarily get the IV crush play, but I am in a spread on the Russell 2000 right now. But I mean, I am in a put spread. Not implied volatility isn't the main factor, of course. That's already been crushed through this pullback. But if you ever are looking for that type of trade, reversion back to the mean or whatever it may be, this is what you want to kind of look for here. So Russell 2000 looking good. Let's go over the VIX. The VIX here dropping drastically after having a nice spike up to about the 40 level of 37, 7-ish. We've been at these highs before, so it's nothing unusual. But as soon as we start to get over these new highs, that's when we become very, unusual. But I don't really see that happening, as we've seen that nice straight move up, but then just correction straight back down. Now we're at 20s. We're at lower levels than we actually were at the beginning of this uptrend here, beginning of this rally. We're at lower levels right now, sitting at below 22, 21.18. So VIX is looking nice to the downside, which means that our markets are looking good to the upside. So that's for basically all of our but all of our index indicators, or all of our indexes there. Those are the ones that I look for. I look at per se. And so I'm just going to go over one stock that I've been watching a lot. You guys have seen me talking about this a lot. MRNA here, almost at new highs again. We were at highs. We've seen a very strong pullback alongside the market. But coming up to new highs again, this would be a very good critical level to see is MRNA going to sustain this level. And if it's going to sustain this level, I'd say look above 180 for MRNA as we are pushing towards the upside. You could short this thing at the level if you're that type of guy, or you can long this thing at this level if you're that type of guy. But all I'm saying is for me, looking at this mRNA, the way I'm gonna play it is I'm gonna be the last guy in. So if anything with mRNA and options and whatnot, I'm just the guy that likes to unless I'm extremely confident on a play. With mRNA, I'm confident on the mRNA just because it's has a lot of catalysts behind it. It is a it is a news catalyst driven stock that is needed in America with the vaccines. So I could potentially see this going to a higher level in the near future. And so that's how I'll be playing it. I'll be playing it to see the strength above the level. If there's no strength, I'll be looking at the reversion back to the mean for this and whatnot. But we have been on a pretty steep rally, way above our moving averages, in fact. So yeah, just keep your eye on the mRNA. That's just one of the stocks that I watch very often, and that I'm going to continue to watch. And you don't have to watch it if you don't want to, because I'm not a financial advisor. It's just something that I'm paying attention to. I don't really like to look at a ton of different stocks. I'm mainly someone who focuses on the indexes, and I trade those. If I do look at a stock, it's going to be very close and tied with the overall economy, and that's why I'm looking at this mRNA. May dabble into some Pfizer, something of that nature. Pfizer though, looking very weak to the downside, breaking below to our 34 level and whatnot. But they released earnings. They beat by 42 cents, but looking very weak right now. I think that we could see correction on this. Pfizer has no reason to be going to the downside, but who knows? We just got to keep our eyes out. We got to wait for the confirmation, and we got to pull the trigger. Hope you guys have a good day, and I will see you in the next one.